Hi everybody, Alex Ploy here from Expert Forex. I hope you enjoyed today's Forex trading video. In this lecture, we're going to address the question, where do I put my stops and my targets when channel trading? Unfortunately, there's not only one answer for that particular question. So I'm going to present you with a number of alternatives, and you can decide which alternative suits you based on your level of trading expertise and confidence. So let's have a look at a general guideline where to put your stops and targets. First general guideline is based on a calculation. So let's have a look how this one works. Let's look at the chart. There is a particular trade that's just been activated. It's bounced on the top of a channel, and we're going to be trading it in the direction of the trend. So pretty good entry. It has bounced a number of times, and we now need to decide where to put our stops and targets. So the first one is to calculate the width of the channel. Now the channel size is very easy to calculate. You calculate the size of the channel, not vertically, but based on square corners, as you can see I'm doing on the screen. So this channel appears to be around about 160 pips wide. So that's the width of the channel. And here's where the calculation comes in. You would go for 80% of the channel width. So 80% of 160 is roughly 130 pips. So you would then put your target at 130 pips. So let's see what happens if I do that. 130 pips, and that's actually a very good target because it's before the previous low. So that is actually a good place to put your target. So you put your target at 130, roundabout where I have it there. Let's mark it. And then your stop would be 40% of the channel width. Well, 40% of 160 is 64. So you would put your stop 64 pips above the entry that you've had. So we just do that. And it would be more or less in this particular area. So again, I'll mark it for you. Okay, so your stop would be there. Your target would be there on that particular transaction using the general guide. The general guide is use 80% of the channel width for your target and use 40% of the channel width for your stop. So when in doubt, apply the general guide. Now let's have a look at a channel trading based method of determining stops and targets. So the idea of channel trading is actually to catch 100% of the move. So if the price was to bounce on that channel line that we're looking at right now, it's expected to come down to the lower channel line. So our target can now move right down here, and we can put our target round about the area where the lower channel line is. Now that improves our target tremendously. If you look at this, this is 200 pips, a 200 pip potential move here. So that's the alternative target that you can set for this particular trade. And if you're setting this kind of target, you can also then set your stop at the channel width. The channel width would be, and you could do this visually, you would probably put your stop roundabout there. Remember this, the price isn't going to go straight up or straight down, so it will take a while to reach your target and your stop. So your stop would be more or less there, which is also quite a big stop. It's 150 pips. That's fine. So you have 150 pip stop and a 200 pip target, and that is fine. So that's the alternative method, which is a visual method. So you would visually see the price should go down there. If the price breaks out, it could go over there. Now the beauty of channel trading is that often when there's a breakout, it comes and retests the breakout point. So it is unlikely that it'll reach the full stop. You have to watch it, and if it does come out and retest the breakout point, you can then get out at a very small stop. Okay, so that's the second method. We could call this the alternative method. And then there are variations on the two methods that I've just shown you. For instance, the alternative method, instead of going for 100% of the move, you could go for 80% of the move, and that would be a bit more conservative, and your stop could be 80% of what we calculated before. So you could turn it into a slightly more conservative way. The other way, which is a third way or a fourth way of putting your stops and targets in, is to look at the support and resistance that actually exists on the chart. So for instance, I have drawn in some support and resistance lines on the chart, the little green, the thin green lines, and you could then say, okay, if I'm going to trade down to this level, I'm going to put my stop just above the previous support and resistance level. So you could actually go with a very small stop. Your stop could be over there, for instance, and your target could be either down here or over here, and it still would be a fantastic risk return ratio. So you could use support and resistance to determine your target areas. This particular trade would be a very good high probability trade. If you're very conservative, you would put your stop behind the next level of support and resistance. That would create a very big stop, but if you keep your target where it's expected to be, it could still be a good trade. When determining your stop and targets, use your trading logic. You could use the general guideline, which is a calculation, or you could use support and resistance based on what is happening on the chart right now. And that's the method that I like using. I like using the current support and resistance levels to determine that. Now, the same logic applies to breakout trades. So I'm not going to repeat the formulas, but you use exactly the same logic on breakout trades. Remember, when there's a breakout, the breakout is likely to move the width of the channel. So there's the guideline to where you expect the breakout to move to, and you can use the same logic. Those three guidelines that I've just mentioned, you can use for breakout trades. So I hope that's helped you. There is no perfect answer. You have to determine what meets your needs best and what your experience teaches you. So let's move on to the next lecture. Thanks for watching this video. You can find links and more information about the video in the description. If you found it interesting, please like it and share it with your friends. Also, remember to subscribe to our channel so that you don't miss any future Forex trading videos. So from me, Alex Deploy, cheerio.